So here's the thing. Market structure is just, you just identify the trend, overall trend. I want to show you how in these simple steps. So let me look for another market. Yeah, let's say even this one. So number one, you need top-down analysis. You have to start from the higher time frame to the lower time frame. So there are three. You identify market structure in three phases. Number one, uptrending market, a downtrending market, and sideways. So you have to go with the trend when trading. Number one, you have to know what market structure in real time. Yeah. So you have to know that the market, when it's uptrending, you need to see higher highs and higher lows. So the market should be going in this manner. Yeah. And this you can say it's an uptrending market. Now this is a uptrending market. Now for a downtrending market, it's just the opposite. It just lower lows and lower highs. You see? This way. Now this is a downtrending market. Now let's go to the charts to identify that thing. When you look at my charts, this is a 4-hour chart. What can you see? You see? Let's use the model we used. Higher high. This is a higher high. Let's go. What do we see? Higher high, higher low. Higher high, higher low. And then higher high. So we can know that from this point that the market was uptrending. The market was in an uptrend. So what do you want to do? You want to trade from these zones. These kind of zones. That's where you want to trade from. These kind of zones. And what do you see from this side? The market reached at that zone and then it reacted. You see? The market is always following the trend. You and me are not going to force the market to move. You see? So market structure, you need to understand what happens to the market. It's just history repeating itself. So you need to identify it very well. So that's to identify the trend. Now let's go to the break of structure. Break of structure is identified by a candle closing above the previous higher high. So like this one. Now this, we can state it as a break of structure. Now that is a break of structure to the upside. You see? That is a break of structure to the upside. Now we come on this side also. This is another break of structure to the upside. Okay? Now we have identified break of structure. You see? Let's say let's look at for a downtrend, and then we can say, you see, this is another way to show you how break of structure is. So this is another break of structure to the downside. This is a break of structure. This is a break of structure. No. This is a break of structure to the downside. You see? This is a break of structure to the downside. The market's not going to be straight. It's just going to show you higher highs, lower lows, lower highs. You see? This is a lower low. This is a lower low. And this is a lower high. You see? So that's why the market is not going to show you directly that this. You must identify it for yourself. That's why I say top down analysis. Start from the higher time frame, drop down to the lower time frame to get the market very well. So now we have I think we have done a break of structure. Now what I think we have to do is change of character. Now what change of character is a price breaking if the price was in a downtrend, forming higher highs and higher lows, lower lows. You see, if price manages to break above this lower high, then this can be termed as a change of character. Let me change the color. Now that is a change of character. You see, that is a change of. Now we are looking for. But if we are looking for sales, we are looking for sales from these zones. Now we start looking for buys. You see, now we start looking for buys. That's the simplest thing I can explain to you. The same way happens to if the market was in an uptrend. So if the market was in an uptrend, we expect it to go form higher highs and higher lows. If it breaks below the higher low, this one, then the market forms a change of character. Change of character, that basically means change in the trend. So here, change in the trend. So that basically is what happens in the market. So you need to identify these things very. Save this video if you want to go and prove it to yourself, but this is basically what happens to the market. So their market structure is just in three phases. There's ranging market, trending market, and uptrending market and a downtrending market. So the ranging market, you don't need to do any analysis there because the market is just going sideways. It's not making anything, just going sideways. You see, and I know you don't want to trade there because it's unpredictable. You see, you don't want to trade at this market because this market is unpredictable. So this market is a no. You're going to take just losses right here. So as a beginner, please make sure you trade with the trend, not against the trend. Identify market structure very well. Identify break of structure. Identify the change of character, and let it tell you that you are in an uptrend or in a downtrend. Don't use the eyes, just use. You may see that the market is going out, but in the lower time frame, the market has just formed a change of character. So now the market is shifting from the uptrend to the downtrend. So you need to know when to enter the market. So bye. Here's on for this video.